Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always. Folks, we might be back a little. I mean, the Orange Man is still causing a ruckus with the tariffs. My home country of Canada, which I'm going to tomorrow, is getting absolutely rocked right now. Global liquidity might be coming in. We might be getting a nice little shot of M2 supply soon, but the tariffs are still sort of creating a huge shit show. But the crypto market, perhaps we have a little bit of a rebound. Hopefully we don't have more pain, but it's good to be sort of back. Don't know if we're back, but it's fun to at least think we're back. Super pumped to have today's guest on the show, the one and only Vikram Arun, co-founder and CEO of Superform, the on-chain wealth app to grow your crypto portfolio. He has a background in engineering and finance and has been building in crypto since 2017. Prior to Superform, he co-founded Ledger Capital, a crypto research firm, and worked on Wall Street conducting biotech equity research and analyzing high-growth tech. At BlockTower Cap, he co-led a $100 million DeFi and Yield Fund, wowza, building scalable trading strategies across 15 chains with a focus on statistical arb. Seeing the need for DeFi products, he left BlockTower in 2021 to launch Superform and holds a bachelor's in engineering and master's in finance from Washington University in St. Louis. What a bio. Jeez Louise. Vic, welcome to the show, my friend. How you doing this lovely morning?
Thanks for having me, Matt.
Are we back, dude, or what? You think we passed the shit show phase, or do we still have a little bit more sideways chop to go?
You know, it's so hard to tell sometimes. Market broadly, really think that we're in a position right now where a lot of the stuff that's happening is something that's being controlled very intelligently. And the crypto market in that entire process is kind of at the forefront of where this new technology and this new financial prospectus kind of ends up leading toward. I do think that there are a lot of things going on, you know, for example, that might actually be more of a feature rather than a bug. And a lot of things that we're seeing in markets right now, I actually think that these things are happening very much on purpose and in a way to solve a lot of the issues that the current administration has surfaced, and that, you know, we have a $30 trillion of debt that needs to be refinanced. We're paying $1 trillion in interest payments every year. How exactly do we solve that? And a lot of that we're kind of seeing play into markets broadly, and then that's ending up with a flowback effect in the crypto markets. A lot of the things that we're seeing on rates and stablecoins and everything else.
Interesting. So you're in that camp as well, and pretty much every guest who's been on the show over the last couple of weeks, Vic, is in the same camp as you and I. Just for the listeners who might not be in tune with this, the U.S. has trillions and trillions of dollars, like Vic said, that they need to refinance over the next, I think it's like 6 to 12 months kind of thing. And if interest rates are much lower, that obviously, you know, they get a free sale on that. They're getting a 50% off coupon, if not more, and they save hundreds of billions, if not trillions of dollars, which makes it a no-brainer to put these tariffs on countries to create a sort of, you know, trade shit show, a market micro macro shit show, which then makes J-Pow and the Fed lower rates. Is that your agreement on this?
Yeah, and if you're the Fed, that's kind of the smartest way to play this entire scenario. And yeah, we'll see where we end up out of it, but we end up spending more on this than we do on defense spending almost.
That's wild. Great start to the show there. Let's jump into, I don't want to get too deep into the background here because the start of the show is you and Superform, but why did you leave your cushy, and I always hate sort of putting words in guests' mouth, but it did sound like it was a pretty sick job you had on Wall Street at BlockTower Cap. Why did you leave to start this? Obviously, you know, reading the bio, it seemed like there was a need for scalable DeFi products. Was there like a trigger moment, an aha moment where you were like, man, this is so inefficient and the team and I can make something way better? Walk me through that story. Why'd you leave and what was the vision to start this?
Well, was always building products in the crypto space before joining a hedge fund. And I think that the itch that needed to be scratched the most for me in that role was wanting to do something that benefited not just, you know, your LPs and investors, but really a way to kind of take all of the stuff that we were building for those clients and turn that into an entire end-to-end product that, you know, me and you and our family could use. So in my job at BlockTower was, you know, trading across a bunch of different ecosystems, was managing this fund mostly in high frequency and yield farming strategies. And we just realized that a lot of that stuff was something that should be accessible, and the entire search, discovery, and execution process around DeFi was something that was incredibly broken. And the people that actually benefit the most from a better process around that were people who we entirely were not involved with. And we wanted to make those products more accessible to people And the only way to really do that was to leave that life behind and go build products again. And yeah, took a lot of that stuff that we were doing there and turned it into something that I think is something that people enjoy using. It solves their core need of, wanting to be able to use this technology. And I think that we're in a position right now in crypto where kind of like we have all this like really cool infrastructure. Now it's like what kinds of cool things can people do on this that finally make me see the vision of why we need things that are, decentralized and performant and transparent and on-chain and everything. So yeah, that's my little spiel.
I love that. I mean, give us a little bit of the elevator pitch before we get into it. I mean, there's so many different things that you guys have kicking off. Obviously, DeFi being the main sort of frontier. Give me the elevator pitch, and then we'll sort of pick and choose where we want to go next. But I really want to get into the stablecoins as well, because I also believe that stablecoins are crypto's sort of killer consumer app, not just for the folks like you and I who could potentially afford to have a bag of stablecoins and receive some killer yield on that, but also in, less fortunate countries where they literally take their paycheck, swap it to stablecoins right away. So then, they have purchasing power as their currency just goes to shit month after month after month. So let's go back to Superform. Tell us what you guys are building and tie in the V2 drop that you guys just launched with the cross-chain yield and automated vaults over thousands of different vaults.
Yeah. So I guess a little bit of context on what we were building in our V1. We were just a marketplace for other protocols. So we had over 1,000 vaults that were permissionless listed on Superform. You can kind of think of it like Uniswap for ERC20 tokens. OpenSea built it for NFTs, and we wanted to build the exact same thing for yield products. So fast forward a couple of years, we had over 1,000 products, 60 protocols. And the number one thing that we were getting from users was, there's so many options here. These products are fundamentally different from, me going and buying an NFT collection. I actually want you guys to tell me and give me a little bit more influence on what exactly I should be doing in DeFi. So we launched a product called Super Vaults, and that kind of led us to our next realization, which is that we're really building to two core user groups. The first is the group of people that are coming on chain who have all of these tokenized assets already. They could be stablecoins. They're mostly stablecoins, but they could be any sort of RWA. They could be treasuries, whatever. And the second user group is actually people who are users and they're coming on chain, but they don't want to feel like they're on chain at all. And these are people that are so used to, trad fintech apps. They're used to just like email logins, passkeys, things like that. And our current app, you have to connect with wallet, you have to use a MetaMask, you still have to go through the entire crypto onboarding process. And that's already creating a drop off of more than, 90% of people normally that would come to a Web3 app.
There's so much friction.
Yeah.
It's nonsense.
Yeah. You have to have assets on that chain. You have to find out a way to bridge. It's really like the laundry list goes on and on. So we launched our V2 to solve a lot of those issues that even crypto natives were having with the existing process, and just make it easier to access the fragmentation, the lack of, any standards, security, all that stuff. And we wanted to create just one app to be able to access yield opportunities in the best way possible. And then on top of that, we doubled down on the Super Vault stack to launch more of those Super Vaults for any given crypto asset. And then there's one Super Vault that lies on top of all that called Super USD, which is effectively a optimized index into individual stablecoins. That's really just, earning on autopilot, and in aggregate, mobile first UX, earning best yields on any asset, especially stablecoins.
Okay. So many different ways we can take this. One thing, the thing I love the most about all this is Super USD. And everyone always asks, and I've heard this question so many times, especially from my normie friends, Vic, when they're like, hey, Z, tell me about some cool shit that's going on in crypto. Obviously, they don't say it like that, but they sort of do say it like that. And I tell them about different opportunities, whether it was meme coins back in the day, present day when the market's down. There's really no better place to grab some quick, easy yield than stablecoins. But people always say, and you have the famous quote, like, if you don't know where the yield is coming from, you are the yield. How would you give that neg, and how would you handle that objection when someone says, how are these guys giving such a high yield? And you sort of explained it, where it's sort of like an index for stablecoins where you guys are snagging yields from everyone else and then passing that yield along. But explain how the yield works and how you guys are able to give such a high yield back to the consumer, because that's what everyone wants to know at the end of the day.
Yeah. So base layer yield from any of these assets comes from a demand for the underlying asset. If it's a stable coin, it's because there's a demand for having dollars on chain and me lending and borrowing those stable coins out. If I were to have, a treasury asset on chain, there'd be additional lending borrowing demand based on me wanting to have marquee American, treasury assets on chain.
Yeah.
And same thing applies for BTC and ETH, and that yield can come from staking. It doesn't have to just come from lending, borrowing. But once you have those base layer yields, then you end up with an entire ecosystem of stuff that gets built on top of that. In the example of, stablecoins, a lot of the, some of the biggest product market that we've seen in DeFi so far is in products like Pendle, which is a trading of yields. And those kinds of products just add more and more utility to what's already been like a very composable base layer of finance that typically we just wouldn't be able to iterate that quickly in the real world. And I think the interesting part on the yields in particular is that Super USD in particular is that Super USD is not just dependent on any individual stablecoin, but it actually can, in a very similar way to how some other DeFi protocols work, it's built so that it can be constructed of any new issuer, any new, stablecoin issuer's entire go-to-market strategy. And it's just a way for them to also get more TVL and liquidity quicker. So it's a bootstrapping mechanism for them, and it's kind of that flywheel gets going, and it allows for more and more people to get access to more liquidity on any fiat or pegged asset base.
What do you, I mean, I love this, and it's been a couple of years now since I've had the notion and sort of thought process that stablecoins will be one of the things that sort of onboards the masses. But how far out are we? Like, you guys have an app with smart accounts, social logins, passkeys, the whole 9 yards. You guys literally have a Web2 app that runs on Web3 backend. It looks and feels like Web2, runs on Web3. Your parents, my parents, be like, man, why am I giving the bank, $1 million to get 2 ticks when I can get potentially 2 digits or an easy 5 or 6 ticks a year with something that's just as safe? How far away are we from that happening in your eyes?
I'm hoping it'll all be there this summer. And from then on, it's going to be us as an industry convincing and doing the required work, to get the message out there and make it clear that these products are, more transparent, which results in more safety than, your traditional counterparts. But I think a good amount of it's going to come down to how we can message it, how easy it is to access, and then the end security of that product that we create. And could dig into the security side of it. But I think generally crypto has done a lot better job at increasing the risk return ratio of those underlying yield assets.
I feel you there, but I really think, Vic, that it's not even like you guys could do a 10 out of 10 job. No such thing as a 10 out of 10. You guys could do a 9.9 out of 10 job. And then we could have more Terra Lunas. We could have more FTXs. I mean, we just had, we had the massive $1.5 billion hack last month. We had the Melee coin shit show. It's never ending. So it's like and of course, how the news cycle works. Like, it's not like, hey, look at what Vikram and the team built, this incredible app called Superform. It gives you high yield and it's super secure and it looks and feels like Web 2. That's not going to make the news. But what will make the news is, a competitor of Superform gets hacked for $100 million. And then my parents, your parents, the boomers, the folks with the money read that and go, fuck that. We're not getting into crypto. Like, it's too risky. You know what I mean? Like, as good of a job as you guys could do, there's still that, like, because we're sort of all one big team here. That's one thing that sort of, I don't want to say crushes my hope, but as things like this continue to happen, it's just like, yeah, it's tough, like, when do you think this changes? Are we going to have to go like years without hacks? Like, how's that whole sentiment going to change? Because I think that's still the biggest issue.
Yeah. I feel like a lot of the things that make crypto great are also what make it the toughest industry to be in, If hacks weren't possible every week, then we wouldn't have innovation every week, in a way.
Yeah.
I'm not sure if we'll ever be able to prevent the ability for people to actually, exploit free permissionless capital moving around in crypto. I think that we can make it so that I think we as an industry need to police ourselves better.
Yeah.
And make it so that, like the next Terra, the next FTX, like we point those things out. And I feel like a lot of people in crypto right now do know where those systemic risks are. And I think as we have gotten better about, getting out there and making sure that doesn't grow too big. But yeah, I think it's about being very intentional with how we're marketing and talking about these products. Even if you look at like the new stablecoin legislation, I think a lot of it actually is going in the right direction. And it's really about, bifurcating where in the stack each person is going to be and making sure that that risk is very clearly laid out. And it's something that is not mismarketed to the end consumer.
Yeah, well said. Vic, you're on a roll here. We got to take a quick break. Give a huge shout out to our sponsor of the show. When we get back, we're going to keep buzzing on Superform. We will continue to buzz on what will bring DeFi to the masses, the current market cycle, and the future of DeFi / the next wave of DeFi applications. Until then, huge shout out to Prime XBT, longtime friends and longtime sponsors of the Crypto News podcast. We love the team at Prime XBT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet. You can easily design and customize your layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for listeners of the Crypto News pod. Use the promo code CryptoNews50, that's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, that's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Now back to the show with Vic. Want to keep buzzing on DeFi, and then, I mean, this is obviously part of what you guys are doing at Superform. Well, it is what you guys are doing at Superform, but I want to go back to what else will bring DeFi to the masses. We have stablecoins, which I think is huge because it's such a no-brainer, but sticky apps are another one, and you are one of the few people in crypto who've actually built a really sticky app. What goes into building that, and how difficult is it to integrate the back-end tech? Because this is something that to me is like, it's so difficult when building a regular Web2 sticky app really isn't that hard. If you know what you're doing. I mean, with LLMs and everything right now, you can pretty much just get the LLM to build one yourself if you know how to code a little bit. But how difficult is it to integrate the crypto Web3 backend applications, servers, blah, 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 with the traditional Web2 stuff like the email, the passkey, the Face ID? Walk me through some of the complexities and the hoops you guys had to jump through to make this happen.
Yeah, I think it's gotten a lot easier because a lot of great teams in crypto are tackling that exact same problem, and they're tackling it from the infrastructure layer too. I don't think there's ever been a better time to build apps in crypto,
Yeah.
just because there's so much stuff that people have built in between the user and the end app that make it a lot easier to actually fulfill, what your traditional crypto app would have had to have spent years actually building. So I think the time to market for a crypto app has definitely like come down by at least 5 times over the last couple of years. And in that process, I mean, like the hardest thing for us has always been figuring out what our users actually will continue using Superform for, because there's so many new trends that happen in crypto. It's like, one day everyone wants to use a new chain. They want to get on Scroll, they want to go on Bear Chain. And then, in 2 months, it's all about, hey, actually, I want this new yield protocol. And these people are doing some, different mechanism behind it. And what exactly is the root action that users are continuing to come back to your platform to do? I think it's really hard to find that out in Web3 because there's so many different incentives and protocols at play, versus in Web2, I think everyone kind of that you use Amazon to go shopping, that you use Facebook to talk to friends, but in crypto, it's
leaders are good,
yeah.
Having something, having a consensus for a specific action or use case or product service, that's a good thing, and we really don't have that. There's so many different products, and then we can talk about sort of the chain abstraction and the liquidity issues as well. It's I do feel like we need that Meta that owns, your Facebook, your Instagram, and your WhatsApp, or we need those, the big 5 banks or the Amazon, like you said. We need that shit badly.
Yeah, totally. Yeah, even if I want to go swap, right? Do I do it on 1inch? Do I do it on Sushi? Where do I go? It's there's so much fragmentation, and I think it's natural. If you look at any new technology industry, it always follows an S curve, right? And we're kind of I think we're toward the end of that S curve going up, and we're slowly flattening off now. But we've just gone through compressed 20 years of innovation in 3 years, and now we're just kind of figuring out what those market leaders are and how we should be directing consumers. But yeah, exciting time to be building.
100%. I want to go back to one of your, I don't want to say hot takes, but one of the takes you have, which is capital efficiency is the next frontier in regards to uncollateralized lending and tokenized RWAs. We've heard a lot of talk about RWAs. I know, BlackRock's sitting in the game. Tons of the biggest firms in the world are getting in the game, sort of bridging that gap between DeFi and TradFi. How far away are we from this? And do you think it's going to still just be sort of bonds, some capital market stuff? I don't think a lot of the use cases that people talk about are going to be brought on chain. I just think it's like, if it works, if it ain't broke, don't fix it. And right now it ain't really broke. Give me your whole sort of TLDR on RWAs and why you think it is one of the sort of next frontiers of capital efficiency.
Everything that's made the blockchain really good for crypto assets, it can do the exact same stuff for real assets. And it makes things easier to transact, makes things more permissionless, it, makes things more secure too, and it makes them composable. And I think we've already seen how those assets perform when they come on chain. You have a bunch of protocols that are tokenizing RWAs. You have, Superstate, Ondo, Centrifuge. There's a whole laundry list of protocols that have really found the ability to take those assets, and whenever you put them on chain, you can now use them in lending borrowing protocols. You can put them on Morpho. They can be used in Euler. And the end result of all of that is a base layer of opportunities that just outperforms objectively how they would perform in the real world. Now, the question that crypto has always been battling is, well, if you're an American investor already, or you have access to capital markets, why would you go buy this stuff on chain? I think that's going to solve itself in the very short-term future, because those same investors can actually earn more off of treasuries if they bought them on chain. And then we're now coming to a point where a lot of protocols have found a lot of success in marketing those products to people who don't actually have access to those products in the first place in international markets. And I think between proving that they're better to customers that can already access them, and then actually improving accessibility, we're now in a position where really the only argument that goes against it is that some of those protocols that might issue them, would there be something in the legal backend or something that would cause those products to not actually be one-to-one, and maybe some legislation comes out which limits that. But I think objectively those assets are better and they're already there. And if you kind of look at some of the stuff that we're talking on stablecoins too, it's like the reason why more and more issuers are coming and they're just issuing very simple products, stablecoins on chain, is because it's just so much easier for them to actually create user bases and demand around those products
100%
when they're there, right? And same thing applies for any of these new products. It's like, if I'm any sort of technology app, I want to have my own stablecoin. I want to have my own, backed treasuries and everything else that I want to issue. So I think it's like a gold rush really for tokenizing a lot of those products, and it benefits from this whole headwind in the government on creating more and more of this long-term debt.
Well said. Vic, great episode here. A couple more questions, then we'll wrap up, my friends. Meme coins. We've got to jump into the memers. Are memes dead? Are we toast on memes? We're going to see another rush like March of 2024, sort of Feb, March, early April, where everything literally, of course you could miss, but you sort of couldn't not miss. Is that done for good? Or are we going to see another rush?
Somebody in the group chat yesterday asked what the next thing is after stablecoins, and the unanimous answer to that was actually meme coins, and I thought that was funny. I think meme coins are culture, and I think until the culture comes back, it might be a little bit tough for meme coins entirely to come back. And crypto's kind of in that spot right now where we're trying to figure out what's next. But I think meme coins at its core, it's just it's a tokenization of a community. At its best, it could be considered like a cult. It's a movement. Crypto will always be that, just because it's so focused on getting everybody involved.
Yeah.
I do think that you had, I guess, like two types of meme coins. You had your PvP meme coins, which was 99% of the space. Then you had PvE kind of meme coins, which were actually focused on getting more and more people involved, and like the Pepes and the Sheeps of the world. And those coins, I think, will be something that continue to like really put crypto in a good light. And then it's just the biggest of double-edged swords in the other stuff. But I think at the end of the day, it's about creating something that your community can really get behind, and letting them take it in whatever way that is like fun and something that people actually enjoy being a part of.
I love that. Vic, great episode, man. Before we let you go, what news do you guys have popping off? I mean, you guys are shipping at a crazy pace. Give us some Superform news, some breaking news in the Crypto News pod before we let you go here today.
Yeah, I think we're really excited that we announced our V2 a couple weeks ago. Actually, last week. Gosh, it's been so long. Excited for people to finally start using apps in the way that a lot of crypto builders have been aching for. And the ability, for us to actually make more and more assets productive on chain, I think will be really great for people to see. And yeah, also on the meme coin front, we have a community project called Piggy that we're going to be announcing some more fun things for, all community driven and fun stuff around the future of Superform B2.
And where can our listeners find you personally, Superform and Peggy? Anything else you want to plug online and on socials?
Follow Superform at SuperformXYZ on Twitter. It's the best place. I'm Vic Runa on Twitter. We also have a really fun Discord. You can jump in there. I think it's just SuperformXYZ. And yeah, those are the best places to come catch us.
Love it. Folks, what an episode with Vikram Arun, CEO of Superform. He was on fire. Touch a little bit of everything, the future of DeFi, the current state of DeFi, high yield stablecoins, why the market is down, why is DeFi finally breaking past the power user bubble, some capital efficiency being the next frontier with RWAs, what will bring DeFi to the masses, and we even touch some meme coins. Huge shout out to Vic and the team for making this happen. If you guys enjoyed this one, I hope you did, please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys. Thank you so much for everything. And back to the listeners, keep on growing those bags and keep on staying healthy, wealthy, and happy. Love you guys, and we'll see you on the next one. Ciao.